Alrighty, hey everybody, this is Scott here again with my next live trading video. Today is Thursday, March 31st, and in this one here, just wanted to walk you through what I think is a very ideal setup for a short strangle trade. And as you'll see here, this is basically a directionally neutral options selling strategy that's comprised of both selling an out of the money call option as well as an out of the money put option. And essentially the idea here is you want the stock to remain in between those two strikes, or basically you want the stock to be just range bound. So again, that's what makes this a directionally neutral strategy, but the main reason why I'm placing this trade today is because I want to take advantage of some still very high implied volatility for, in this case, Roblox. So RBLX is the ticker symbol, and this company here is basically involved in online gaming and online entertainment. So once more, the focus of this video here is I'm going to walk you through very carefully this new trade I'm going to make in Roblox in real time and explain my thought process behind it, what implied volatility is, and specifically how to take advantage of implied volatility with this kind of strategy. Now, as always, before we dive in here, in case you are brand new to the channel, again, my name is Scott, and I just want to let you know that you can also find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading or stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Okay, so focusing on the charts here, as you can see, Roblox in the past few months has undergone a bit of a bear market of its own. So this stock has fallen from a price of around 140 bucks per share down to a low, at least so far, of 36 bucks per share. So that's a pretty staggering decline of about 75% or so. And very recently, this stock has recovered a little bit up to around 50 bucks per share. And now, if we go ahead and zoom in a little bit here on this chart, as you can see, Roblox has been stuck in a bit of a consolidation pattern for the past couple days. So therefore, I don't really have a directional assumption on the stock right now. So the trade I'm going to place here is going to be a directionally neutral trade. So that's going to be a short strangle. And this kind of trade here is especially useful when the implied volatility for the stock that you're trading is still very, very high. So if we focus on these two charts down below, I'll expand them a little bit. Now, normally I use this chart to analyze the implied volatility for the stock. Right, and that's because it should be showing a full chart of the implied volatility for Roblox over the past 1 year. And also you get the IV rank and IV percentile indicators as well. But unfortunately, this stock has not been around for too long. So for some reason here, this particular chart is missing some data. So that's why for the time being, I've added this chart down below. This one comes built in with thinkorswim, and it simply shows you the implied volatility. And again, I'm not really sure why this chart here is not showing the exact same thing down here, but we'll just have to deal with it. But still, we can at least take a visual look at this chart here and just say that, yes, indeed, the implied volatility for Roblox is still much higher than usual compared to the past. And this is very important stuff because, in case you're not aware, implied volatility is basically a measurement of uncertainty about, in this case, Roblox's future. And implied volatility in general is used to price option contracts. And specifically, with greater implied volatility and therefore greater uncertainty about the stock's future, the greater the option prices will be. So therefore, as an option seller, I want to find the stocks that have the most expensive options. And that's mostly going to be based on where the implied volatility is for that particular stock. So again, here with Roblox having come down so much in the recent few months here, of course, there's now a lot of uncertainty about what the stock is going to do in the near future. And as a result, that's why all through this time here, we saw a continuous expansion of the implied volatility for Roblox. Now, also one more important thing about implied volatility is that typically it does not stay elevated for very long. Most of the time, implied volatility does contract or it comes back down. And therefore, keeping in mind what I just said, if implied volatility does come back down, that's also going to reduce the prices of option contracts. And that's what you want as an option seller. You want to sell an option for a very high price and then potentially buy it back for a much lower price and make the difference as your profit. So ultimately, by selling a short strangle on Roblox here, which is basically a combination of selling an out-of-the-money call option and also an out-of-the-money put option, I'm betting that Roblox here is going to stay within this nice price range. And if that does continue to happen, and Roblox continues to stabilize a bit, then my expectation would be to see the implied volatility for Roblox to come back down. And that is what would allow me to make a profit on this position. So with all that being said, let's now come over to the trade tab and take a look at the option chain for Roblox. For this trade, I was considering going into the regular April monthly contracts with only 14 days left to go. But unfortunately, with only 2 weeks left, there's not a lot of premium left to sell in these options. So that leaves me with selling contracts in any one of these weekly expiration cycles. And typically, I like to be around 30 days to expiration, so I'm going to go into this one here. This is the April 29th cycle. And as you can see, I've already gone ahead and picked out my strikes for the call option as well as the put option. So in this case, on the put side here, I'm going to sell the 39 strike contracts with a 15 delta. And then on the call side, I'm going to sell the 56 strike calls with a 26 delta. And so, because the delta on these contracts is larger than the delta on the puts, that's going to make this strangle here slightly bearish. So again, keeping in mind this massive sell-off that Roblox has undergone in the recent months, if this does actually continue at some point, right? Perhaps if Roblox eventually fails out of this consolidation pattern and starts to move back down lower again, then that's why I want my strangle here again to be slightly bearish. So coming back to the trade tab again, and now we'll come down here and right click on the call option and go to sell and then strangle. And that brings up the sell order down below. And so for this trade, I'm going to sell 2 contracts each, 2 calls and 2 puts. And I'll try and do so for a price of around $232 in credit for each strangle. So in total, that would be about $464, which is very nice. And so then lastly, we'll go to confirm and send and take a look at the buying power effect for this trade. So right now, this trade's going to require about $1,000 of capital to be tied up. That's totally fine. Typically, I want to be under 5% of my account allocated for one individual trade. So again, this is totally fine here. And then we'll go to send. And there we go. Just got filled at exactly 232. Awesome. Great. And so the next step here is to come down and once again, click on the call option and now go to buy and strangle. Because what I'm going to do here is set up my buying order to close out this trade and take my profits if this trade does actually work out. So we'll try and buy back both of these contracts, 56 strike call, 39 strike put, and typically I'll take my profits at around 50% of the maximum. So if my starting credit on each strangle was $232, that means I'll want to buy them back for around $116, exactly half price. So we'll lock that in and then also make it a GTC order so it's always in place, and then confirm and send and send. And then one final thing to mention about this trade here, if I'm actually super dead wrong on this trade, and let's say Roblox decides to move in one way or the other, either to the upside or the downside, and if, for example, the stock breaches my call strike here, then at around that point, I'm going to purchase 200 shares of the stock, 100 shares per contract, because those shares of long stock will cover these initially naked call options. And obviously, I don't want to be caught in a situation where perhaps Roblox does skyrocket, and if I did nothing to defend the trade, then I would lose a lot of money on these naked call options. And then in a similar fashion, if Roblox does decide to fall significantly once again and blow past my put strikes here, then again, around that point, I'm going to short 200 shares of the stock to cover the put options. And of course, if that does happen, then I'll try and make a video that will show you everything that I'm doing to defend the trade. And so with that being said, that's going to do it for this video. I hope you enjoyed it, and please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want to take some very in-depth classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.